Que sera, sera. Whatever will be, she says. What's your view on this cut? Was it a dovish cut or a hawkish cut?
I think that was a very dovish cut, and the ECB, apologies, the ECB, of course, has this data dependency. What every single central bank should do, they are monitoring data. When you listen very carefully to Lagarde, she said it was pretty obvious that the path for monetary policy was to go down further. When you also look at the inflation forecast, they have been at 2%, I think, for 5 consecutive quarters, expecting 2% by the end of 2025. So the ECB is pretty confident that the inflation is under control. So if now the economy is weakening, what I expect, I see an ECB cutting more aggressively starting in December and even more aggressively in the first half of next year.
Okay, so unpack it for me. How much further do you see the ECB cutting rates from this point on? And look, there are others out there who say markets are a little too aggressive in pricing 5+ cuts by the end of 2025. How would you respond to that?
I'm even more aggressive, Don, than to be honest, because I think it wouldn't make sense for the ECB to spread out rate cuts until the end of 2025. I think by the end of 2025, the Eurozone economy and the global economy will have started to recover again. So what I would expect is that we see a December cut, 25 or 50, and then we will see in the first half of 2025, when we feel the soft landing in the US also coming over to Europe, when we see continued growth issues in Europe, and at the same time an inflation that is probably by then below 2%. I see 100 basis points rate cuts in the first half of next year, and then the ECB would stop with a terminal rate of around 2.25 by the summer of next year.
Okay, I'm trying to think of ways to challenge your view here. So how much of a headache do you think the euro is right now for the ECB? And could currency concerns, particularly given what we're seeing unfold at the Fed right now, limit the ECB's room to cut? What's your view?
Not really. I think we are at 110, and this is not a worry for the ECB. We've seen a bit of a strengthening of the euro exchange rate over the last 3 months, but this is really not a worry. To the opposite. I think it would help the ECB getting inflation under control. At the same time, you also talked about oil prices earlier in this show. We see that lower oil prices would also help the ECB getting inflation under control. I think the biggest concern and probably the biggest risk for my call would be domestic inflation, services inflation, being stickier than currently expected. How could this come? If we were to see a better economic outcome, if we were to see that wage growth was continued to be higher throughout 2025, then I think my call would be challenged, because then we would have an ECB still struggling to find a good balance between, on the one hand, supporting a weak Eurozone recovery, but at the same time continuing to fight inflation, which then might be still too high.